of the morning presented by Uptake. I'm Tony, joined by Donny. Donny, volumes tick down slightly, rejection rates falling even further.
Yeah, so we're looking at our outbound tender volume index. So this is dry van, reefer, flatbed, everything mixed in here together. And we were headed in the right direction. I was hoping it would sustain itself. We're getting close to the end of the month. I was hoping that we would get close enough to the end of the month that it would keep it going up, but no. But it didn't drop far, Tony, just a few points. What's concerning is our rejection rates that are dropping down to 5.71%.
Yep.
We were already low, but as the spot markets continue to deteriorate, this is just carriers falling back into compliance.
Yep.
We're finding other lanes that are contracted because maybe the shippers aren't accepting all the carriers that are trying to fall back into compliance.
Yeah.
Let's hop into the next chart, and I will show you. We'll kind of split it up here. I got dry van tender rejection rates and reefer tender rejection rates. Dry van tender rejection rates dropped down to 5.89%. Continuing to slide. It's been rough for the dry van season here over the past several weeks, and it continues to deteriorate as well. But what concerned me was the reefer one dropping down to 6.70%, over a little bit over a half a point here that it fell. But we were hoping, we saw the seasonality of reefer kind of picking up here over the next month and a half. And we started that trend, headed up, and then we dropped back down here just before the end of the month.
Yeah, I think that's what's in it. I mean, the end of the month's what, Wednesday? I mean, and you've got a weekend. So you figured like there would be a little momentum, at least starting now through the rest of the month. And then you have the holiday, right? So it's kind of this double whammy that's coming up. And it's actually having a opposite impact of what it traditionally would, right? You'd see it, volumes, rejections, everything start to rise around this time.
We might see a wash. We might, maybe the end of the month is really not going to be like an end of the month, but that buildup is going to be before that Friday before the Labor Day.
Yeah. And
if that doesn't strengthen for carriers, then that's what we've already kind of shown improvement. We're going to have a very soft fourth quarter.
Yeah, I was going to say, I mean, September.
It's got to start building now, and if it doesn't, then shippers are going to control the markets. Spot rates, they're going to pick up when we get closer to Christmas, but not near like what we thought.
Yeah, absolutely. And I think what's going to be interesting, right? August comes to a close. You're in September, final month of the third quarter, which is crazy to say because it feels like this year's just flown by. But it's going to be interesting what the large carriers say on those third quarter earnings calls when you start looking at what July was like, what August has been like. If September doesn't have that strength that it should, things don't look great. I mean, they're contract heavy, but still.
They're not going to have that spread either.
Yep, exactly.
They're going to lose several cents per mile. Let's try to bounce in here to one more. Contracted rates, we're seeing the same thing, Tony. Yep. Dry van here in blue, continuing to go down to 274. We saw reefer building back up as spot rates built back up, and that's what we always say, spot rates lead the market. So it was exciting to see this jump here, from the basically about 15 cents per mile. But then here again, it's already dropped back down 4 or 5 cents a mile.
Awesome. Well, thank you so much for this update, Donny. We'll be sure to check in with you again in the second hour. Right now, toss it back over to Thomas and Anthony.